Good day. Ira Epstein of Linn and Associates with your metal market wrap-up for Tuesday, and we're now at the 24th of August, 2021, getting on to 5:20 p.m. Central Time. Gold opened a bit lower tonight. In fact, if you take a look, most of the metals are down in the early evening trade. A continuation of the two-day rally, the reflation rally taking place still in the stock market. The dollar index fell back a bit, but you're getting down into key support. We'll talk about that soon too. In the energy market, we're waiting to see just how the EIA report comes out in the morning. And if you take a look at bonds and notes, they're just sort of holding here as the market's in that Friday morning speech by Fed Chair Powell at the Jackson Hole Symposium, which is being held virtually. Obviously, the news of the day centered around Afghanistan. We are moving out. From what I understand, we've already removed over 1,000 of our troops. The Taliban has told us they'll give us to Friday, and after that, the deal is off, and we are running. It's that simple. Although the president did say some 75,000 evacuees have now been taken out of there. That's quite a stunning number, and apparently planes are taking off every 45 minutes. The question is, now the Taliban has said no more Afghans. Big problem. No more Afghans. So if you didn't get on that plane, what's your future? As for an American, if you didn't get to that airport, I don't know what's holding you up, but do so. So now we have to look at what the House is doing. The House says that they've made headway, and that everything's going to be pushed to a September 27th bill on the $3.5 trillion package. I'm not quite certain what it means for the budget or for the smaller package, the infrastructure bill, which is about $1 trillion. So we're going to find out, but there seems to be a way that they're coupled, not coupled, and I don't understand exactly what Ms. Pelosi has done, but I wouldn't bet against her, and I wrote about that today. She is shrewd. In the gold market, you're still trying to get up to that key resistance of the 18-week moving average of closes. I don't know that you're going to make it. The market is starting to run out of a bit of the momentum it had. You can see how it's come up here, and I have tried to point out to you that you're in all this resistance now. When the market broke down, this all became a resistance area in the market. So as you're coming back up, now you're fighting that overhead resistance, and people that got caught after that August 6th jobs data, when the market did this huge break, if they held on, they were able to get out, which was amazing to me. I'm going to be on BNN TV in Canada tomorrow morning at 10:05 Chicago time. So if you watch this, you might want to tune into that. That's Chicago time. In the market, when you look at the swing line, they're still up, higher lows, higher highs. They were up yesterday. So the trend as we define there is up. But I pointed out some important resistance. I said you've got the 100-day average and the 200. That doesn't mean the trend isn't up, but for those that caught this move, I think they're taking money off the table there. Why? This is a heck of a run to come all the way back up to, and those are important averages that often act as support if they go down to them when you're trying to hold an uptrend, or resistance if the market's staying in a longer-term downtrend. We've already looked at prices on the weekly charts, and you're not over that 18-week average. If the market can get through here, you've got the 200-day, as you can see, that's coming in at 1820.80, and the Bollinger Band's another $19 higher. But that would be one heck of a move, wouldn't it? We'll see. What about support in the market? I think the pros will probably try to buy it at 1784, but I think if you got under 1778, they'd go, enough of it, if the market embeds. Aha, you're overbought. Do you think overbought attracts a lot of fresh new money? I don't. I can understand the money being bought here, but once you get up to those levels, you either lock in and embed, or the market runs out of momentum. I'm thinking it's going to run out of momentum. I am not a top picker. In the gold-silver ratio, as you can see, the market's slipping back, so silver is gaining slightly on the gold market, and you see that on the chart. The downtrend is not in play. You have a lower low now and a higher high. The resistance should be the 2404.5 zone, but again, this market has been staying under the moving average, that 18, all the way down here. So the first challenge of it, again, like it did here, often prone to fail. We'll see if it does that or not. Copper market right up to the key resistance. In my charting course, I'm always talking about where is the line in the sand on a chart. I believe, and I say this to you all the time here, it's the 18-day moving average, the 18-week. Traders focus in. You're probably going to be a wise guy and say, well, Ira, could it be the 20 or the 21? Whatever you want it to be. I use the 18. And more times than not, I use it because you manage to get right to it and you start slipping back. I've used the other ones. I've used optimization services over the year where they come in, they tell you which one's working best at that exact point in time. I'm not a day trading type of guy, so I don't care. I'm looking at zones on a market for these, and that's basically what I'm looking at. I'm looking for resistance on the rally because my work is saying, hey, you've been under that 18-week average. It's under the 100. You had a bearish crossover, and you never did drop after you did that. If you take a look at when the crossover had happened, right here, the market had already, take a look, came down just the next day, and then it was gone. So I guess you did have it for a day. That's not bad. Where do you think platinum's stopping? Right at that 18-day average of closes, same thing. And I wouldn't be surprised to see the palladium lift up to 25.51.70 and run into its resistance there as well. It's as though last week we washed out the commodity markets. This week the reflation trade, you hear that everywhere, is back on, and the question is, do you get involved with it or do you sit back and observe it? That's the hardest thing to figure out. In the dollar, I told you I thought the dollar's breaking back, and I'm looking for the support right here at the 92.78 level, let's call it. That 18-week average. Is the trade going to buy it? Well, you're still overbought. Anytime I see a reading over 74, the way I teach charting, it keeps my, if you will, followers away from that. We see the trend is up. We're not blind, but we have other indicators and other parameters that say sometimes, hey, maybe that's not where you want to go. And with that in mind, you know, we offer, if you like to read, our Guide to Technical Indicators, volumes 1 and 2. Starts off talking about charts, then a lot of chart patterns. All done, by the way, in color with descriptions on everything, moving averages, the different oscillators. I like slow stochastics, others like MACD, what the spreads do, what they tell you, Elliott, Gann wave, price-time relationship. That's the Arun indicator that I always talk about here. I haven't done it in a while. I should again. Money management. As important as any tool you're ever going to look at. How do you get this? It's simple. Just go to our website. On the bottom right, you're going to see free offers. Open that up, click it, and we'll get it out to you. 2 volumes. I think you'll find them great. They're from our friends at Futures Magazine. You have a great day.